Good morning all. Good morning. Thank you for coming down. Thank you for coming so early, and as always we couldn't help with the traffic, but thanks for making the effort. So this is the first Cresco event of the day. In fact, we are speed dating today at the Cresco events. We have one in the morning on renewable energy, and sorry, before I start, you're welcome to join any of the other sessions if you'd like. We just tried to focus the specific participants and their focus areas and the topics involved, but it's not closed. So I'll touch on our more detailed engagement now, but at lunchtime we're doing one on gas opportunities in South Africa, specifically on gas and then balancing power, and in the evening we're doing one on, so the one in the afternoon is going to be opened by James Mackay on the gas problems, and then we're doing one in the evening on infrastructure and logistics, so kind of talk not about energy, because everything else at the moment is talking about energy. And then we have a gentleman called Ian Bird, who's on the Presidential Crisis Committee, a James Mackay equivalent, also teaching Transnet drivers how to drive trains. So if that's of interest, please join us at 4 o'clock later. But this morning, hopefully some interesting topics. The slides will be available afterwards. There'll also be a link to a recording. So we are recording the event. So if anyone's watching you don't want to be seen, please just cover your face accordingly there. But each of the presenters will present themselves. I think you probably know most of the people on the list, but I think the theme of today for me is a little bit around what SAIP are doing. Cresco has a view on the market going forward, so I have a little bit of data in my slides, and apologies if it is a little bit heavy on PowerPoint, and then Jason's going to tell us how Rex are going to save the world. So I look forward to that. Thank you very much. If I ask Brian to come up, thank you.
Thanks very much, Rob. It's great to be here this morning. Greetings to you all. And seeing as we've started off with being a bit controversial and teaching Transnet how to drive trains, I think they can drive them, they're just in the workshop. But and I need an engineer to help me with this, and that's fine. So my name's Brian Day. I've been in the industry for about 15 years. Energy, I tell people that half of what I know about wind was taught to me by Dieter when he was at Hatch, and part of a group that took Exaro as mainly a coal company into renewables and formed Synergy. I've also done some time in the IPP office. Yeah, that sounds a bit like a sentence, but it was actually quite interesting. SAIP as an organization has been going since 2009, always been technology agnostic, not really very renewables at the time, but then not very many people were, but always been very focused on what it takes to be an independent power producer. And so fought the good fights on Schedule 2. There was a 2013 version, a 2017 version, and it was one step forward, 3 steps back, 5 sideways until basically just over a year ago, which has really unlocked the industry. So as SAIP, we do work on wheeling, on tariffs, on cogeneration, where Dave Long is really trying to get the country to understand that there's up to 6 gigawatts of capacity available that's either built or could be built quickly as cogeneration, either combined heat and power, which is embedded, and it's load following. So it's one step behind dispatchable. And so we really do feel like we're fighting an uphill battle. So any of you who are not members yet, please do come and join us and expand our reach and our impact. I'm just going to give a very broad kind of impact introduction as a non-economist in terms of the importance of tariffs and how I believe they've been forgotten in the maturing of the industry. We talk about Unbundling Eskom, and right even before Doretta was there in October 2019, they published their roadmap. They're going well. They've got NTCSA has got a board. The Electricity Regulation Amendment Bill is in. There's a lot of pressure to try and get that through in this Parliament. Of course, it won't happen, but maybe soon after that. and enabling, in generic terms, a TSO to do the things that a TSO does, which facilitates capacity on the grid. So unbundling the sector, as in Eskom, without unbundling tariffs is kind of pointless in my view. So just a couple of things. What is the impact of bundled tariffs? Tariff aggregation pitfalls, tariff components, and the objectives of unbundling of tariffs. So we all know that tariffs are going up, and got a few pretty pictures that tells a story. But how much should each of the components of the tariff actually be going up? And that therein lies the actual problem. So a cute diagram at the bottom between apples and oranges with a very different supply and demand profile. But if you just look at fruits, you behave incorrectly from an economics point of view. The impact of full tariff aggregation has been to cloud capital allocation in Eskom. We all know that Kusile and Medupi and Ingula massively overspent, and part of the source of additional funds was just to take it from transmission. And of course, in terms of the sector, what is, I think, two of the biggest issues for us: one is tariffs, the second one is grid capacity. Just this week, the Eskom announced the curtailment rules, almost 4,000 megawatts across the two Cape provinces. Obviously, that needs to come into the Northern Cape as well. And what the RPP office does in terms of bid window 7 and actually bringing that to bear, and what happens with private projects, because you cannot just say, oh, it's less than 10%, because between the buyer and the buyer must take the risk. Well, the seller's going to put 10% on the tariff. There's no other alternative. Again, a sub-optimization on an economic point of view, because even when the curtailment is 0 or 2% or 2.73 or whatever it is, the buyer's going to be paying the full 10. It's also an unfair benefit to rich households. And I include myself in that. I've never really considered myself rich, because that's the Oppenheimers and now the Mosepes and co. But actually, anyone who can put PV on their rooftop is rich in the context of the country. So I live in Tshwane, and there the rate at the third block is what, over R3.50 a kilowatt hour. So that's what I avoid. I avoid the full cost because the tariff is bundled. And it's an inappropriate measure, and I actually therefore gain unfairly. Having said that, it's also a sub-optimization, because if the service provider, the grid connector Tshwane, unbundled their tariffs, which would be a negative to me, but also allowed feed-in and time of use. Firstly, I would put in another 10 kilowatt hours of batteries tomorrow, and probably a few extra panels as well. And they would benefit, and I would benefit. So the current situation is unfair to the poor, and me and Tshwane. But if you just do the basics of putting the right tariffs in place, not just for the big corporates, but households, because who causes the evening peak? It's you and me. We go home, we turn our geyser on, we cook dinner. Well, hopefully we cook on gas these days. But in fact, what I tell people is 120%, or more than 100, of the evening peak is caused by households. Now, you might think that's a weird statement, but actually, a whole lot of businesses close down by the time the peak happens. So there's a negative coming from many other customers. So the cause of the evening peak is from where it is to somewhere lower than what it was during the middle of the day when commerce was active. Many of you will know what the tariff components are, but sometimes you've got to sort of step back and look at Economics 101. In what industry do we bundle tariffs? If we go to a supermarket, can we only buy 3 bananas, 2 apples, and 5 pears together and pay for one thing once? And throw away 2 of the bananas because they go off before we use them? So it's not just about unbundling tariffs. Bundled tariffs are a bizarre economic concept. And there's got to be a very good reason for them to exist. Now, 20 years ago, it's all coal, they all run at 80, 85% EAF. You remember those days? Some will. You might as well just bundle the tariff. But when you've got distributed generation, variable, and don't call it intermittent, people, that suggests an inability to predict it. That's just the wrong word. Variable, because you can predict it, then, and you've got a different impact on grid, because honestly, as much as I'm very, very pro renewables, I'm also very, very pro battery and whatever other backup peaking balancing is necessary to make that possible. But if you're going to connect 100 megawatts of PV and 100 megawatts of gas, your grid cost per energy output is very different. It's higher for renewables. So you've got to take the good with the bad and understand all of the details. So you can read the slide for yourself. I've spoken about time of use tariffs, and time of use tariffs and feed-in at households is actually absolutely critical. So what would the objectives be? First and foremost is a sustainable, a financially sustainable TSO, or as the Electricity Regulation Amendment Bill says, the NTCSA, because the cash goes through them and then to others. And that allows them to become creditworthy long before the derelict generation plant will ever become sustainable. And of course, the distribution side is a complete different problem, non-payment of fees. Maybe we should all go on to prepaid. I was actually thinking about that this morning. In what industry do you post-pay? Let's think of the fruit at the supermarket. I prepay for my food. I prepay for just about everything I buy. When I buy it, I pay for it. So post-pay is strange. Forcing people onto prepay is not strange. It's actually just normal economics. Who lets you take something and then pay for it? Well, you can get an account, but then they check your creditworthiness. You know, there's like a process for that. So anyway, that was an arbitrary thought this morning. Economic optimization. I mentioned how we allocate the risk of curtailment for private PPAs. It has to be shared, either between everybody on the grid, or at least a node on the grid, and that, for me, is the conversation. Is it a node? Is it everybody? But that's an economic optimization for the country. And of course, if you've got an independent NTCSA, then they can look at it through that lens, not through an Eskom lens, which is bundled. Then we need investment by private capital into grid expansion. In about 2 weeks' time, we're hosting an event, a breakfast event. It'll be here. We're going to start at 7 o'clock, so come before the traffic. There'll be breakfast, and Corinne Breitenbach will be speaking. Chris Yelland will ask a few probing questions, as he is wont to do. We've got Standard Bank on the panel. We're going to have a few other people on the panel. And if anyone knows Corinne, she doesn't mess around with niceties. She's earned the right to say it like it is. And I'm really looking forward to what we could and should do in terms of private capital into grid expansion. And then, of course, municipal distribution sustainability, which I'm not going to go into now. That's a 3-day conference all on itself. But too often we forget about it. And then my last slide, I think, is on government-business partnerships. And the diagram I found on Sunday when I was preparing this is going to be my new favorite, because each of those pictures is a view of the other by the other. So it's a view of a capitalist by a socialist, and a view of a socialist by a capitalist. And of course, it tells a very different story. And I remember being inspired by the previous German ambassador to South and Southern Africa, saying how we need to get over the debate, the ideological handbrake of socialism versus capitalism, the role of the private sector. Are the greedy capitalists going to come and, I can't use that word, the poor, and how we optimize. And really, the quote that I've got there is from a departing open letter that the departing ambassador gave, and I've got a reference at the bottom so you can get the source. And it's about strong government. So if your government has failed such that they have to institute crisis committees, and you started being controversial. So actually, is it not government failure if I have to introduce a crisis committee and ask people to help me because I didn't govern well? Now, that's not dissing the people involved or government or being unpatriotic. That's just a harsh reality, guys. We've got stuff to fix as a country. So you need a strong government, a strong Electricity Regulation Act and the appropriate regulation, because that's what the private sector responds to. Then you can have business that is fair, that is reasonable, because I say to people, the only thing worse than a government-owned monopoly is a privately owned monopoly. They will work out how to maximize profits in a very, very efficient way. So that's it from me. Thank you very much for your time. I hope it spurred a few thoughts.
So I think we were willing to take one or two questions now and then some at the end.
Excellent. Ask them. I'm going to grab my water while you ask them. Come on, you've got to have a question. Etienne.
There seems to be a misconception within the industry that the energy portion of the tariff needs to get smaller going forward, and the fixed portion of the tariff will go up. And that's purely because we're going from a fuel-based economy, where you're burning fuel, to where you use the sun that is free.
I would suggest that as a proportion, yes. If the energy tariff, the energy portion of the tariff goes down in an absolute sense, I'm not sure that that would be correct. But as a proportion, it absolutely has to, because we have to properly fund grid, transmission and distribution. So I like that question, and I know one of our SIPA members had a big question about that. I met one of her people earlier today. So as a proportion, absolutely it has to shift. Two more questions. Okay, wait for the microphone.
Sorry, we're recording, so we won't get you on TV, but you smile into the camera.
Can I just ask, so let's say these wheeling projects that are closing or have closed, obviously the client pays a wheeling charge, the generator pays a wheeling charge. How do we kind of cater for that? So if the tariff is unbundled and those charges change, I mean, that materially impacts those projects that have closed. You know, how do we cater? Is that a change in law? You know, who takes that risk?
That risk clearly sits with the buyer already. And if they haven't understood that, they didn't ask the right lawyer the right question. Because essentially the avoided cost is the energy portion. They still pay their fixed charges, admin charges, NMD, all of that. The generator only pays a small admin charge. And that's literally just to do their accounting and whatnot. And I think that's where the nervousness comes from Etienne's question, is if the energy part of it decreases, your credit to the buyer under the wheeling arrangement could decrease. And that would erode the benefit, the NPV of having done the project. But the most important thing for me is to get over this hurdle and actually have appropriate economic signals. Let's cost things for what they cost. My behavior at 6 o'clock at night, if I want to turn on my geyser or not, should cost me money. And I think having, for the long-term sustainability of the industry, you need appropriate economic signals. And it's really back to Economics 101.
Thank you. I actually have a little slide on that now. So thank you. Thank you for the question. Now I can connect us down. So I think, Brian, what you failed to mention in your CV is either you have a fruit farm or you own a food lovers market. But I like the fruit analogy.
Hey, Google brought up fruit on Sunday when I was preparing.
Fair enough. No, cool. Thank you. So I sort of had two topics in this. As I said, unfortunately, it's a little bit PowerPoint heavy, but data generally is. But hopefully, it will be of interest, and we will share the slides afterwards. There. So just me, boring accountant, doing lots of energy work at the moment. 2 years ago, focused very much on RFPs and that, but now my key focus now is sort of energy strategy, trading, balancing where we're going, and largely trying to help large users prepare for this thing called the balanced responsible load, balanced responsible generator world that we are going to get into soon. This is a little bit of a slide in terms of what we've been doing over the last 4 or 5 years and where we see the market going forward. So, I believe wheeling as a concept is well established. In fact, we've been wheeling since 2004, cogeneration. We have, about 1,500 megs that achieved financial close last year, hopefully another 1,500 megs this year. Cresco's involved in a number of those, and I think if you put 10 lawyers in a room, you might actually agree on 90% of the PPA terms on a bilateral agreement, which I think has moved materially well over time. My percentages you might disagree with, but it's a concept. Now we see this whole push towards BESS. Obviously, government procurement of BESS. We have some data centers that we're assisting with. So MTN, we assisted them with a small 5 megawatt PV, 6 megawatt hour battery, but it's giving them 3 hours of load shedding resilience for 2 of their buildings. And they have gas on site, and that is now becoming operational end of the March. So we see a lot of these sort of projects coming in, so BESS, and even larger scale BESS using balancing and that. We obviously want to see the push towards long duration storage. We're starting to do a bit of work on that. Although if you go to an EPC contractor and you say, give me a price, a firm price will only be lithium, anything else will be a marketing document. So I think we're still early stages there, but we are seeing some interesting numbers. And then the whole SAP engagement, we're doing a fair bit of cross-border wheeling deals. We engaged with NERSA before Christmas as part of the trading license applications, and they said, we're open for import-export permits. Now, we haven't quite got the docs yet, to give us a couple of months. So that concept at least is being opened up, and I think we believe that for many of our clients, imported hydro is a no-brainer into South Africa, specifically for decarbonisation, but also it is a fairly well-priced source of energy and well-established in the region. And then we are now moving, and this is the 24-25 focus in terms of 4 or 5 years' time. Cool, Sasol's done their first round of procurement, they've maybe done their second round of procurement, they're at 30-40%. What do we do now? We now potentially have a day-ahead market. We have balancing power. How do we prepare for this world that we've never really been ready for? Because most of our clients, their energy strategy was playing golf with a gentleman from across the road there, and now they potentially have to become an energy player. And obviously certain clients, Mvusa, Anglo, are going to become an energy company themselves. Others, Netcare, are relying on someone else to do it for them, depending on their ability and their load. So I think this is what we're trying to do now. Myself, I'm specifically working on the buyer side, but also with many IPPs in terms of their strategy too. This slide again talks to where we did some work. So off-site wheeling, very interesting. Grid constraints, let's look at on-site. Let's actually get an energy strategy, because that's quite important, because you can't have it, because you have targets, but that's not a strategy. And then we see a real push into cogen, and I think Brian made the point about cogen and Dave Long. I know Dave's been trying this for years, and the first wheeling deals were cogen, the sugar and the paper mills and that. But we are seeing a push towards off-gas and heat, and with the price points, energy costs being higher and the price points being lower, and theoretically most of these projects are kind of behind the meter. There's actually a lot of value in cogen. BESS at an infancy. We saw a lot of carbon involvement. Cresco bought some credits. Jason registered them for us, or REC, should I say, not credits, registered. And then the work that we see going forward is, what are we going to do for, and this doesn't mean this is going to happen next year, but it's the feasibility and planning for this, because that's kind of what we're looking at, 3 to 5 year horizon. We're going to have excess energy. What are we going to do with this? Or certain buyers aren't going to take the full allocation. What's the IPP going to do this? The balancing charges. We've got to support the grid in some way. And then we're definitely seeing a movement towards time of use tariffs from IPPs to offset the time of use tariffs from the Eskom side. And also the way of covering in your bids, the IPPs are guaranteeing a lot of, or saying they'll give us a lot of peak hours. Happy to pay more if I'm getting more. So this for us is very much how the IPPs are going to probably transition their model towards what the buyers are doing. Okay, and then we have this whole idea of, I guess, and I know Eskom uses different words, traditional wheeling. We have a little bill here with the credit and the red ones coming through, this concept of virtual wheeling. I know Eskom has a plan, Vodacom apparently has a plan, I think Discovery Green have a plan, so there's lots of things. I think we had this token idea that Meridian mentioned yesterday. Lots of interesting plans. I think Eskom, for me, obviously the ones that I'm focusing the most on. But I think what people don't really get to is there's a lot of detail behind this that you're not aware of. And if you just look at traditional wheeling, the amount of points on the bill, the amount of credits, the reconciliation, this is not an insignificant task that people are thinking about, from being able to move from a couple of loads and a couple of generators. And I understand Eskom very soon will be able to do 50 metering points, which I think meets the requirement for most of our clients at this stage. And that will get them through the next 2-3 years based on the current generation that's there. It won't get them into the future, but for me, traditional wheeling, or I think the term is portfolio wheeling that Eskom uses, covers most of the wheeling requirements we have already in South Africa. And the idea of virtual wheeling is interesting, but I think the next level down is concerned. And then I think everyone is quite excited or scared around this day-ahead market. And Keith Bowen is very bullish, and I applaud his enthusiasm and the fact that he's pushing this so hard. I believe we do need to get ERA approved in some form, and I agree with Brian's comment that it's probably not going to be in this parliamentary sitting. There's a few other things on the agenda apparently, like the elections and bits and pieces. But for me, that is the one big catalyst. And we're kind of already starting to see a little bit of an informal over-the-counter day-ahead market. There are a few traders who have existing generation, so that, in my view, are actual traders as opposed to people who still want to build small megawatts in their respect, and they're selling on 1 month, 2 month type deals, doing special deals. We procured energy recently for one of our clients for 1 year. It was 2 megs. It wasn't interesting in the world scheme, but it's creating that precedent that will bring everyone to the market. And I think for us, this is interesting. It's also going to be quite a risk. And in this afternoon session, we have Enaweb, Gerard from Enaweb, who actually is the software that supports SAP. And he's doing a little bit of discussion around the price points and things like that. And you can see that the price point in SAP, where there's a day-ahead market, very much mimics the Eskom time of use periods. Largely seasonal winter, summer, higher winter, some summer. Obviously a bit of volatility in there. And that means that a day-ahead market, if you use SAP as a mimic of Eskom, you're still going to be paying north of 4 Rand for winter peak. And that is either an opportunity, depending on the technology you have, or a real risk if someone's told you that enter that energy for you and you don't get it. Obviously the risk on that side. So for us, interesting development. And then we talked about the Eskom Megaflex tariff adjustments, and I think briefly earlier for the question. So when we do a lot of analysis for buyers of power, we obviously try and compare each of the bids on a like-for-like basis as a starting point. So let's get the wheat to come to the top and the chaff drops out the bottom. And this is very much on Eskom increasing over time, but not really major restructuring of the tariff. We obviously might have some adjustments of the IPP tariff that we don't always believe the 50 cents quotes. In fact, those are probably already in the chaff, because I don't believe that ever exists anymore. In fact, I don't think it actually worked in REAP either. I don't think we ever got tariffs there. And then eventually we hopefully get with the top 3. We look at the top 3, and then we start running the Eskom tariff adjustments and the future going there. And the first 3 were in Eskom's retail tariff application in 2022. Unfortunately, all of them were rebuffed. I think we're waiting for the updated Eskom tariff determination, the public document that will unpack these. So our analysis, unfortunately, is using 2022 numbers that we've escalated, and for Khan in the front to spend many hours trying to unpack this thing there. But this is really around the rebalancing of this tariff. So this whole idea of a generator capacity charge, rebalancing of standard and off-peak, morning to the evening, all that sort of stuff. And then that often differentiates. Third in the list actually might come first in our little ranking order and things like that. And then we talk about what we don't really know a lot about, because these other ones, we actually have Eskom's numbers. We might disagree that NERSA might approve it, but we have at least some base numbers to work with. And what that's around the balancing market, if the generation doesn't happen, if you need to support the grid. And to be honest, at the moment, most of the balancing pricing is a little bit of left thumb, but we are getting better at the data. And then if you speak to Shirley Savaldi from Eskom, and sorry to quote her, they're not here, her biggest questioning around wheeling or the viability of wheeling is if the WEP's tariff changes. And the biggest component of the WEP's tariff that I believe will change is the transmission losses. And at the moment, transmission losses are equal in the time of use period, but that's clearly not the case, because peak power definitely has different attributes. And therefore, if that changes and suddenly you have 10% transmission losses in peak and 2% in off-peak, or vice versa, that's going to completely change the savings calc. And so this is the kind of the next level of detail of analysis that we typically do for our clients, which typically IPPs don't see, because this is kind of the world that I believe we're going to live in, and we're going to have more stuff in here that I haven't even thought of. In fact, the full list of changes is at about 15. The other stuff is even more vague, to be honest. And for the bulk of the IPP periods that most of our clients are buying up for, this tariff regime in some form is going to be there, and from that point of view. And I think just this bottom slide, if you can see there, that talks to the peak, trough and thing, and that's why they're actually changing the home flex tariffs in the last tariff application. Now, that talks to tariffs, hopefully. Cresco, based on so we actually started with a load shedding tool. Our clients asked us to predict load shedding, which one has looked like a really cool, it's a really cool Excel file, but it's completely derived based on unplanned maintenance, and no one can guess that. So the outputs of the tool look impressive, but to be honest, it doesn't actually add much value in our view. Don't tell the client. They're not here, thankfully, who do that work for. We're trying, but we built on this tool because we were measuring Eskom loads on a unit basis. We had the REAP projects, we had gas, we had the pump storage, we had fairly good numbers for each of the generation profiles. The REAP generation profiles, good or bad, are published, and at least they might not be perfectly accurate, but they're in the ballpark. We also have some of the gas projects, and so what we've done is we've created this database of generators. I think we have probably over 300 different generators in the database, if not more. We have the REAP projects, I think there's 113 plus the new ones coming, and then we have about 200 private sector projects that we've received over the last 3-4 years from various RFPs, and we have their locations, the generation profiles, and at least some information to put a real pin in a map and go, this is real generation. We also have benchmarks and stuff like that, that's a separate discussion. So we've built this bottom-up analysis as much as possible based on imperfect data, but hopefully better data, all due respect, than some people have. And we know our analysis is wrong, and we know different people have different things, but we're trying to project what we think is going to happen in the market. There are a number of caveats at the end. I just didn't want to start this like a lawyer and just have 2 pages of caveats and then 1 slide, so I'm trying to be obvious about it. So we're digging everyone today, Brian. So on the left we have megawatts, on the right we have megawatt hours, okay? This is trying to mimic today's 2024 position in the grid. Obviously, large component of coal, mostly REAP, PV and wind. Embedded power, we haven't really ascribed a full value to, so at the moment our analysis is substantially short on embedded power. So the 5,000 megs of PV that's been on people's roofs, we're still trying to validate the number and understand how we build it into our analysis, because theoretically that is actually reducing demand because it's net metering as opposed to wheeling of power. So we are conscious that our numbers kind of have to be a little bit higher there. And obviously you can see that the Eskom coal fleet reduction in megawatts is based on the JET decommissioning plan, not the IRP Eskom one, which we're still trying to work on. And then what we've tried to do here in terms of, and I'll talk about the generation later. So you can see over time we have megawatts coming down, clearly the PV and wind coming up. We have the IRP from 2019 as the top line, which unfortunately is much higher than actual demand, which kind of makes sense because we haven't grown since 2019, plus we don't have energy. And then it sort of shows some really nice improvements in generation, and we have more generation than sort of demand from 2030 onwards. But in the later slides, you'll see that's not technically correct. And if you measure everything on an annual basis, yes. But if you analyze it on a daily basis, we have complete ups and downs in the period. We do.
Sorry, this is
Yes, it's all capacity on the left, yes. Yeah.
But if you have an EAF at 50%.
Yeah, so this is an EAF at 50%. Yeah, sorry, I didn't mention that. Sorry, so there is an assumption slide. But yeah, this is EAF at 50% based on historical trends. And we don't have each coal-fired power station's individual EAF. They do publish it, but it's a bit late. So we kind of analyze it. In total, it equals that number. But each power station is modeled individually, so when it's decommissioned, you actually lose megawatts hours rather than the other way around. Yeah, so there it is. Okay. Then what we've done is off our database, we've gone and looked at sort of PV wind capacity coming through. So this is the rest of the REAP deals that are being built, the RMIPP deals that have recently closed. You know, we assume bid window 7 hopefully will happen in the next 3 years, not 2028, I think, which is one of the clarifications around grid. So we assume that a lot of this capacity is going to come online in the next 3-4 years. We also have all the larger private sector deals that either we're involved in or PR releases in these first couple of years coming forward. So that's really on the right. You can see these deals coming through. And then we also have overlaid a EPC capacity constraint, which at the moment in our view is about 5,000 megs, 2,000 wind, 3,000 PV. We've engaged with a number of EPC contractors who, even though they use different numbers, if you average it, is about 3,000 as a constraint. And we've then also gone and taken projects in our databases that are in grid constrained area, haven't considered curtailment, because that only came out yesterday, right? So I couldn't manage to update the analysis overnight. And then we've pushed those projects further into the pipeline, saying that the grid will become unconstrained over time, but let's focus on what's possible in the short term.
Can I ask now?
Yeah, I mean, if it's interactive, if you're happy, yeah. Sorry, can we... while we wait for Brian's question, I'll quickly go. And then we have sort of seen a dip in 2030, and that seems to be mimicked by many of the other industry analysts, and I think that's due to a grid constraint. So we do have a little bit of a dip in the analysis, and obviously a perfect line then doesn't show that we actually applied our mind, I think, too. Cool, Brian?
Thanks, Rob. I'm very interested in the EPC capacity. What is the potential to re-establish that capacity, in other words, to grow it over 2, 5, 10 years? Because I think there's two numbers that are important. There's one, a harsh reality of where it sits now, but the ability to regrow it, if there's certainty of coming demand.
I haven't spent a lot of time considering the EPC capacity. That's a bit of work I'll do next month on some of our current assignments. But I think if you just, so as an example, there's a few previous EPC contractors who are now only inverter suppliers and panel suppliers in South Africa. And they, when we engaged with them, they said, to be honest, I don't need to play in South Africa. I have enough work in Europe and other areas where I don't have to deal with logistical challenges, all these other hurdles that we have. And I know private sector generally has less hurdles than REIT, but it's still not zero. And I think a lot of them are going, you know, like, we don't need your work. We still want to be active in the subcontinent and involved, and obviously South Africa's megawatt potential is so much higher than other regions, but we're not desperate that we need to come and actually build factories and all that sort of stuff. So that's the one comment. And obviously on the other one, it's the same issue as that sits in this room. You know, I'll pick on Investec because they're well represented. Like, there's only so many people they have. They can only do so many deals. There's only so many lawyers and stuff like that. There's only so many skilled engineers. So I think the people capacity is the other big issue. And you can't just train an engineer in 3 years, you know. And then we could spend 7 hours discussing our visa problems, but that's a separate debate, yeah. But hopefully I answered that. Okay, so in terms of our projections, we have a lot of accuracy around the next, I believe, 4 to 6 years. And then as you'll see from 2030 onwards, it honestly becomes a little bit of a guess. And the generation is really from PV and wind is really just replacing the coal coming down. But we don't have enough projects in our database. Now, it doesn't mean that Cresco has the total database, but I'd be surprised if we don't have at least 60 or 70%. And that means we actually don't have permitted projects yet in the pipeline to fill the post-2030 process. Because permitting a project is not as quick as 12 months EIA. You know, to get it to what could be financially closed, and I look at a few people in the room here, and we know that at the rock face, getting projects to financial close is painful, specifically from permits point of view. And so these projects take a long time to develop, never mind wind taking much longer. And so we haven't seen those pipelines coming yet that will then fulfill the 2030 shortfall. So it still needs to come, but once again, who's going to do this permitting work if they're actually busy on the current projects? You know? It's the same EIA consultant doing the specialist study. It's the same grid engineer. So at the moment we see clear constraints. Demand, anyone's guess really, to be honest. So we've used the IRP 2% demand as a base point and fairly reasonable. We have also, based on our database of clients plus public things, also tried to split the demand into certain sections. The reason we only have one slide here is this is still incomplete and there's quite a few holes in the analysis, whereas on the generator side we don't, there's improvements but not that much. But we've looked at large user clients, smaller users, municipalities and residential. And then what we plan to do as part of the later analysis is actually looking at, so the large energy user clients on average have a 30% target penetration by 2026. How far are they actually based on their actual generation? And that we're just hoping to get some of that data out there. But demand is a real concern. And then I guess this is where the embedded generation is a question. How much is this actually reducing demand? In reality, we don't have a view on that, but hopefully we can get better information. And
just a question.
Sorry, just will you wait for the pretty thing? Thank you.
Have you got an idea what is the from an energy perspective? And I'm talking about liquid fuels now, but there are a lot of first of all, electrification is a long-term trend, right? People are trying to more and more electrify, and there are thousands of boilers run either by gas or by coal still in South Africa. And what's the split in terms of energy demand if you were to convert those coal gas-fired boilers to electrically driven heat pumps, molten salt storage, or even ceramic systems, right?
So we don't have that sort of data for the industry at all. I mean, we've been involved in one or two cogen projects for the sugar industry, obviously changing that, and we know there are 300-400 megawatts potential there, but I don't have a view because we don't really have the customer base. But I do believe it would be sizable, I would agree.
Maybe just a point, last year I attended Inter Solar, and there was a very clear comments made that the behind-the-meter installations in all European countries will actually increase to above what the total electricity demand is in those countries. And the Netherlands apparently is already there. So I think that area is significant, and not just the 5,500 megawatts with a 2% growth or something like this.
No, I think we're aligned, and that's why we're unsure of how we actually model this embedded generation, because we are trying to get down to the next level of analysis, which is kind of represented in the next graph here. And the question then is, this is your typical day in an average year across the generation, but then if embedded is actually as big as we say it is, what does that do to the demand in the middle of the day? And what does that mean? So it is I agree with you, it's a big number. We don't have a view on it as yet as Cresco that we are confident to present.
Maybe just a last point. I mean, on your longer term projections, beyond 2030, 2035, you should definitely make provision for more gas-fired power, and which could be converted always to hydrogen eventually, fired, and potentially also nuclear power.
So if you come to the gas one this afternoon, Dieter, we're going to talk more about the gas, but we do have gas in our projections. It is quite a bit more delayed than the IRP says there. We don't believe you'll get close to those timelines, but we do have gas coming in as a balancing that, but we will be touching on it a bit later. I was trying to cover there. We also have significant imported hydro as an option. So we have that, and we actually have a number of hydro projects in our feasibilities where we can actually run of river profiles and stuff.
But not Inga. I mean.
No, real projects, yeah. No offense to Inga. The hydros. So we have a list of at least 20 in Zambia that were in feasibility stage from ZESCO, from some other arbitration work that we're doing there. And then there's Hanenkur, which I think is actually progressing. Not saying all of them are going to get there, okay? That is still far away. This is the hydro coming later. There's Mpatamanga, that's also big. Patoka Gorge, I think will eventually become a project. I don't think 2,400 megs, but something there. And then you've got a number of other smaller hydros within the Zambian region. So I think if you did a oversubscription of projects versus what we're, I think we probably have a 3 or 4 times oversubscription of projects we're aware of, not necessarily due diligence, versus what we've assumed as an import. So I think we're confident that there will be hydro available. And then the other bit, just to finish this discussion, is at the moment most of the hydros are not built because the utilities in the region are bankrupt, right? And these projects have been burned. But with South African large corporates requiring additional decarbonisation and the requirement for imported hydro, we believe that those balance sheets could be allocated towards some of those projects to make the hydros bankable, not in totality. So I don't think it will be a bilateral wheeling deal, but there will be credit support that I think will unlock some of those projects from a credit point of view. We don't have huge hydro coming in between 2030, but there is some building up over time.
And how will the SAP?
Yes. Cool. So we've tried to mimic, and sorry, I'm going to finish off quickly because I think I'm way over our timeline. So we've tried to mimic 2024 as we see it in an average day. This is an average part of the country, and surprise, surprise, we have significant shortfall of energy. Now, we know in reality load shedding happens over the day, over the country. So this red bit obviously would actually in reality happen over the year. So we have the coal hopefully running pretty consistently during the day. We have the other generation coming up. As I've mentioned, mostly REAP type projects. We have some of the wind coming in more consistent. So this is off an example solar and wind project. We haven't done the full portfolio. So this is just for inferences purposes. So I'm sure people could find huge amount of fault with our data here. This is just to show a trend rather than hold me to the, you said there were 12,000 gigs of whatever at a point in time. And then surprise, surprise, as the demand goes up in the evening, we obviously don't have that ability going forward. As a percentage, renewables is actually really small. We know that. As a renewable penetration over the day, hope you like our new funky 24/7 graphs. They're getting quite cool. Google inspired. You can see where the generation is happening over here, off our 2 example projects. So it would be a little bit different if you ran the portfolio. And then you have theoretically the load shedding in the early evenings, surprise, surprise. And then you have the renewable penetration. So we have about a 11% average renewable penetration using these 2 projects across the total grid over the day, but a 23% potential penetration in the late afternoon. So interesting, but not really going to move the needle as we know, okay? If we move to 2030, using Cresco, those view, same 2 projects modeled, bigger grid, bigger allocation, more energy in the mix, and you can see here, coming in, this is just a percentage graph. We still have load shedding issues in the early evenings, slightly less than we did, and this obviously assumes we don't have significant unplanned maintenance happening all the time, okay? This assumes a 50% EAF, but we're not losing load all the time. That might be a theoretical world, but let's just go with it. It looks good in Excel. And then we have already potentially excess energy happening in the middle of the day. And I think that talks very much to the curtailment issue that Eskom is talking about. And then if we actually achieved our 2019 demand, we would have significant load shedding issues. I guess luckily or unluckily for the country, we have lower demand and therefore it's less of an issue. And here we have sort of an average of actually 40% penetration, mostly in the evening hours, in the mid-afternoon hours, and you can see the green with quite heavy penetration, obviously above 100% actually in the afternoon hours, but nothing really at night. Needs a bit more hydro. And then you go to 2040, and this trend is obviously just exacerbated because you just have so much more renewables on the grid. You have a lot less coal because now we only really have, I think, 3 power stations left at the end of their life. And unfortunately, it does show we will still have load shedding because, and maybe not all over the day, but because we have this complete imbalance between evening peaks and excess energy during the day. And I believe, obviously, the day-ahead market, we haven't included large-scale BESS in our analysis yet. We're still doing that. So you would find that a lot of this peak could be moved into into the off-peak, and in 2040 maybe we would have found something like nickel or iron ore that's bulk produced to create long-term storage. But without BESS, we're going to have the situation, really nice renewable penetration, to be honest, so hopefully we'll achieve some of our jet targets. And then the clock is looking very nice and green, but the underlying grid issues haven't gone away. And we have more of everything, but we still have problems, per se. This is just a little bit of our assumptions, which is there, and I think I've touched on some of them, but I think the constraints in the model, and this is my caveat, obviously is demand seasonality throughout the year. We don't really have that yet, because it isn't a flat demand, as well as during the day. We do have a slight imbalance between the generation of coal and renewables time of use. We know BESS would change this picture, along with the gas is already in there and that. And then obviously we have done no grid technical modeling. We have done a high-level assessment of when projects are available versus grid capacity, but we haven't gone to that level of detail, so I'm sure people come and point out and say, this project can't connect because this reason, but that's not the point of this. I think what we're trying to do is show a trend, and we believe off the back of this we could build quite a bit of interesting stuff. Grid emission factors changing, very interesting for most of our big clients. Where we get to in terms of large-scale BESS, where does it need to go? And then theoretically also start calculating large cost of generation and cost of generation when it happens in the time of the day, which is what Brian mentioned earlier as a point. So food for thought. Happy to take sort of one question to give Jason some time to wax lyrical.
Thanks. So my question's on your 2040 view, actually.
Okay.
So that's 16 years from now. I understand we still wouldn't have reached end of life of a lot of the solar projects, that are now, but I'm talking more commercial and residential. The inverters are starting to reach end of life. Degradation of panels have reached a certain stage. Do you think that the households and commercial industry will recapitalize and keep the same? Or do you see a decline in actual renewable energy embedded at that stage? Because the market is liberalized, it might be cheaper just to buy from the market as opposed to now, replacing solar panels on my home.
Okay.
Thanks.
So we have built degradation into the PV assumptions. So there is a little bit of a thing. As I said, we have understated embedded. So I believe by that stage, this concept of security of supply at home would be embedded in most households. So it's more of a personal view. And I believe most people would go and buy the latest panel where you'll get this much generation versus what you're getting for that now, and you'd have the latest toy. And in most cases, you might find that you can actually take yourself fully off the grid because the technology has advanced so much, and maybe the grid is just there if you have an unplanned maintenance event, So I believe that type of thinking and that will still continue. And I'd be surprised if that they don't recapitalize with the latest cool tech. Cool. Thank you very much. Hopefully some food for thought. Jason. So Jason has 73 slides, so good luck.
I'm not going to use any of them. Thanks, Rob. Morning, everyone. It feels like it should be afternoon already. If you did come ahead of the traffic, which is like at sunrise, a bit closer to the mic. I was going to wander all the way out there, Rob. I'm going to pick up on some of the themes. Sorry, just firstly to say morning and to acknowledge, I wanted to acknowledge Saipa and Cresco for putting this together. Also the REXA members who are here, Volker Munster on our executive committee, and members of the ZRX team, Rwanda Janssen from Rensburg here, and Ashwarya Chetty. But just to say, the title, when Rob roped us into this, it's evolved a little, and I like the one that it's become, a different approach to the market. So Brian started out talking about components of the tariff, and I'm going to talk about yet another component. So not just about volume charges, capacity charges, ancillary system charges. I'm going to talk about environmental attributes, about REX. So there's another cost in there, and there's another price signal. And I suppose with all of these, there's the slide deck that we use, that I've used here, is usually the one we use sort of as a frequently asked questions. And in the fledgling REX market, we've spent a lot of time doing sort of establishing new market participants. So I see a number of people in the audience that we've chatted to over the years, some over decades, existing market participants in the REX market, and I trust future participants in that market. And some of those interactions are sort of every 12 months, someone wants to have a chat and ask some more questions and see how they incorporate this in their modeling and their revenue streams. And then it's becoming ever more urgent. So we've actually started a tracking system to try and see the time from a first inquiry for someone wanting to enter the REX market to when those transactions start to close. So REXA is the Association of Market Participants, and everyone who participates in the market assists in the governance of that market. So it's a self-governing market, and there's a board or an executive committee tasked with maintaining the rules. Because to some extent, these are virtual assets, digital assets, to some extent largely unregulated. They're not regulated like the price of physical power and the complicated tariffs that Brian was talking about. But Brian spoke about the components of those tariffs and how they change. So the message that I'd like to get across are threefold. Choice of supplier. To date, we've never had a choice of supplier. If you were in a municipal area, you took from the municipality or you took from Eskom. 60% of the power was taken by 40% of the EIUG and now many SAIPA members, and 40% of the supply was in the municipal domain by 60% of the customers. So choice. Ultimately, what is the impact on the viability of your project? So that was Rob's, the title initially. What are the changes of tariff impacts on the viability of projects in these Uber models, Rob? And it's good to see them. I think us mere mortals are just trying to keep up with those models that you've got in the background there. And then the last, when I get there, it's 7 slides deep, so 7 minutes, 7 slides. I think I've already used 3 probably. But the benefits of actually participating in the system and of participating in its governance. So the last bullet point is membership of the REXA Association. I'm trying to find a cursor. So where did REX start out? These are South African rural solar home systems. In the late 90s, early 2000s, these programs started and did maybe 100,000. Those are 50-watt panels up on that pole. It's changed a lot over the course of the program, but they were the kind of projects that now we refer to as boutique, low volume, high price attributes. So this project, the whole program, is 10,000 solar home systems, standalone systems, spread over 10,000 square kilometers. Essentially the early virtual utilities, the kind of things we're moving into now. They're not connected by wires, they're connected by the information systems and the revenue management systems that allow them to operate. And it's that data that ultimately becomes issued renewable energy certificates, or a whole slew of other environmental attribute certificates. So that's the broader concept. And you'll see there's so much going on now. It's changed so much over the years, over 20 years that we've been involved in the market. And there are, just yesterday, the talk of the energy token credit. So would they be fungible in the REX market? How would those information systems harness to the registry? And I'll make reference to differentiated purchase agreements. So on the banner for this, there were 3 points. When I say differentiated purchase agreements, I'm talking beyond what Brian's talking about actually making all of those components explicit in your tariff and more cost reflective, I guess. The fact that there are multiple standards. So we often make the joke that this is really an acronym soup. So just REX and EACs I've already used this morning. But there are, you'll see mention of the AREX, the African REX for the African continent, and AREX Plus, and GOREX in the EU, and the European ETS, and then there's all the carbon terminology, and so it goes on, pink REX, and black REX, and GOREX, and so on and so forth. So it's a difficult space to move into, it's an exciting space to move into, and where do you position yourself? Where's the best cost benefit for you participating either as a project developer or as a customer who needs those green attributes? And so that market is developing rapidly. I'll talk about different standards and initiatives and guidelines. So you'll have heard of the RE100 initiative, for example. So companies that have committed to 100% renewables by a certain time. About the Carbon Disclosure Project, where you're disclosing your greenhouse gas emissions, the Science Based Target Initiative, all have their own nuances and rules of how they operate and what you can achieve using them. And as a result, they have different market prices. So this theme of a different market approach could be interpreted in two ways. Rob made reference to, an emerging spot market or a day-ahead market where there's bilateral trades happening. They're sort of outside the status quo, and you're just waiting. And for a long time, the REX market was almost the virtual part of this tariff, this non-physical part of the way the price is made up, to some extent impacted the physical side of the market. So we started to think about tracking systems, for example, higher resolution. How do we keep track of the power that we buy and sell? Maybe they're just time of use buckets. So that's not a very granular system. The REX system starts to, and the EAC systems generally start to go really deep. So you'll have heard of 24/7 carbon-free electricity. How do you match your consumption profile with a generation profile or multiple generation profiles? So if you start to blend a bit of wind, some solar, some biomass, and build up whatever the profile it is that you need, and the systems that you require to do those. So the EAC systems have sort of been ahead of the physical power systems for some time, and they've driven them. And now they're starting to catch up. So now we're talking about virtual wheeling and the energy token credit system, and those systems would be more sophisticated. So the two are starting to collide, and that the option to choose your supplier and the characteristics of the power that you buy, whether it's on the physical side, so additional reliability. There was a joke a while ago about Eskom Prime, that you could pay an additional tariff to not be load shed, right? And how you would initiate some of that. So it sounds like a dream, but it's actually it's theoretically possible, and there are instances where that takes place, even within the municipal system, off the record. So, and we're looking at pretty pictures here. We're not going to get through two of my slides, but there's a huge range from those tiny off-grid systems to, so this is a 100 megawatt wind farm, the way the big government underwritten the REIPP projects participate in these. There's some uncertainty. Who owns these environmental attributes? How do we actually buy and sell them? So I said that we spend a lot of time thinking about how that happens. That's what the registry does, is it can guarantee where the power has come from, with a beginning and end date and timestamp, a unique serial number on coupons, and then guarantee the ownership thereof. So you would buy and sell it like you would buy and sell any other asset. The owner signs to transfer it to another owner. And then the last thing on the bill was a fair price for carbon. So how does this all relate to the emerging greenhouse gas emissions dispensation? And those of you who've waded out into this field will know what is the price of a renewable energy certificate is a big question, and how do we answer that? Well, the correct answer is speak to someone who's buying or selling. Just do it was the European Association of Issuing Bodies theme, and the Europeans have been at this for 30 years. We're just getting there, and the region, at the continent, indeed, is probably still another 5 or 10 years down the line. So what is it really worth? There have been times in the European market where the price of the attributes of the power have actually exceeded the physical price of the power. So you have a drought, there's less hydropower available, and the attributes become extremely valuable. We've started seeing, when I say differentiated contracts, also more sophisticated trilateral contracts, for example, where there's, we talk about backup RECs. So it's so important that the power that's being purchased by corporates who have commitments to have the associated guarantees that power has come from green sources, that right up front, where you would, for example, have a clause in your contract for non-delivery of physical power, they're making sure that if there's non-delivery of physical power from the renewable facilities, that there's already a supplier, an alternative supplier to supply the environmental attribute certificates. So I think the theme is that it's changed dramatically. It looks like 2023 was a bumper year, and I think 2024 will probably be the same. The rate at which market entrants are entering the market, there are roughly 200 active market participants in the ZA REX registry, and about 200 registered generators participating. But this is just so there's that choice at the end of this slide. How do we, for the first time, we can start to choose, we can enter into bilateral contracts, we can will, we can, but in addition to that, we can start to think about the value of renewably generated power. And that part of whether you want to call it an externality cost or get to Brian's economics and price indicators, that's increasing. So in general, the way we're going to have to deal with greenhouse gases and with those commitments is increasing. We've already got price indicators out there, $20 for a carbon border adjustment mechanism. And we've got the super carbon intensive economy, a lot of these commodities that need to be exported. For the first time, we're talking not about, we used to talk about, when we said 10 RECs, we were referring to 10 megawatt hours. That's the unit of a REC. Now when we talk about 10 in parlance, we're actually talking about 10,000. So the game has changed quite a lot. And I expect this year that we'll probably see the first coupons in the 10 to the power of 5 range, in the 100,000 single transaction deals. And ultimately the megaton range. How will the RECs, how the markets relate to one another? Is a REC fungible in the carbon tax system? Not yet. There's work underway to make it thus. It's already used in the carbon disclosure project, so you can reduce your indirect greenhouse gas emissions reporting using market-based mechanisms like RECs. And there are many others. So it's sort of my message is a mix of, if you're new to RECs and you haven't encountered them first at all, there are fewer and fewer people who have not. 5 or 10 years ago, they were largely unheard of. A versatile, flexible mechanism, small is profitable, diverse is robust. This is all old language where we were saying we have to diversify our energy mix, and how do you really cost it, and how do you drive that change? And the bottom line is that when you start to, in negotiations, in PPA negotiations, where the contracts were previously all undifferentiated, and when I say that I mean grey power or brown power, so there was no specification of we specifically want green power. And now many, even most contracts have those clauses in them, and they're becoming more clear about the ownership of those attributes, and they're having an impact on the price, whether it's in a bundled, and again this is language that we use sort of interchangeably, where a bundled contract is you're buying physical power and the associated attributes together, versus unbundled power, where you're selling an undifferentiated product. So even though I'm buying solar power from you, there's no discussion of who owns the attributes. Essentially, I'm buying grid mix power. and the attributes can then be sold separately. It's a lot to take in. There's my Rexa membership slide, so I could probably stop there. I've mentioned some of these things already, indirect greenhouse gas emissions, how this relates to the South African carbon tax regime. There's members from the Environmental Integrity Committee. Ian Curry is here from the Inclusive Carbon Standard, for example. There's Ian. There he is. There's a lookalike. Ian Herman from here look like the same person. How would that work? There's a ministerial determination pending for a local carbon standard. Someone was saying to me this morning they purchased or they registered for voluntary carbon VCUs and the actual cost of the registration. So all the international consultants flying out to do this work. A lot of what we've done in the Rexa system and in the AREX system is try to make sure that when we talk localization, it's not just localization of the product, it's localization of the service, that the people running the registry, doing the registrations are locals. It drives the transaction costs down, and that means that, for example, we can get down to smaller systems, that the transaction costs don't kill the face value of the commodity that we're trying to buy and sell. So consolidators and aggregators, these are new market concepts, so an alternative approach to the market. If you're consolidating generation or aggregating demand, how do you have a system of all the rooftop solar out there? A rule of thumb is each kilowatt of generation capacity is worth about 2 megawatt hours per year, per annum. It's not a lot. If you've got a 10 kilowatt system on your roof, I don't know what yours was, Brian, you're generating 20 RECs a year. If those have a face value at the gazetted SARS electricity levy of 35 Rand per megawatt hour, it's only 700 Rand a year. It's not a lot to get someone out there to verify that system's working, that your metering data is going wherever it's going to some centralized data hub, that it's getting there in a sound way, and then going through the processes that we do, the issuance, the transfer of those attributes, and ultimately the redemption, which provides the evidence for claims that people are making against their environmental targets. Emerging platforms and exchanges. So there are a number of new, I think Annalisa Matatu is here from the JSE, looking at a voluntary carbon market, which may or may not include a REX product. There are a number of others, fuelswitch.io, the Green Asset Exchange, IEP Global. You've heard words like Discovery Green today. There's a lot of activity happening. And where do you go? You can go anywhere you want. You can find out, how do you find out what the price is? Our advice is usually get in there. That's what Cresco did. How do we buy and sell RECs? What's the experience like? What is the value that we garner from it? What are the costs of participation? But all of this is now becoming more standardized. The way that we're harnessing to those platforms and exchanges is becoming documented. The system's supposed to be becoming more automated. So we run a semi-automated registry where there's still lots of people involved. And make no excuses for that anymore, because I think it's in a fledgling market, that's very important. But the pace is picking up. I've mentioned that there are various standards and initiatives. Continentally, there's work on an African REX standard, the AREX rules and AREX Plus. So that, like I said, you then have labels on top of your REX. So you can buy, for example, nuclear-free labeled REX. So you can't buy from a utility that also generates nuclear. So then that gets a special additional tag. So the markets are very sophisticated, and in a way we're still wading out there. The REX numbers from Rexa in November, which is the last number that was signed off, was getting close to half a terawatt hour for the year. It's not a lot in a total market of 200 terawatt hours, but it's getting there. It's no longer insignificant. We're getting up to a percentage or two of the total market. And remembering that the South African grid is maybe 7 or 8% renewable now, we've got a long way to go. So that 92% is waiting for us to make the change. I think I'm going to. This is the controversial slide, where Brian was going, but you know, some of the myths, debunking some of the myths. You can't really have a 100% renewable energy system, because how would you do that? Where does the power come from to build wind turbines? Well, of course, that's a defunct argument. You can build wind turbines with green power, right? So it iteratively becomes better. So there are renewable inputs to that renewable system. Broadly, this paper is from an AMEU paper. I think the AMEU and SAIPA share a common secretariat. This was from 2012, but it refers to, there was reference to it earlier, what happens when the rich defect from the grid and what's left behind is super expensive. And those with the capital to invest actually start to win, Brian. Closing the loop, how do we arrest that trend? Some of the thoughts are that you use some of the revenues from these environmental attributes to start to plow back into things like electrification, into pro-poor and high social impact projects. So there are a number of traders, for example, who offer those kinds of offerings, that a percentage of what you spend on buying RECs or market-based commodities will go to actual projects, and then ultimately getting to everyone. I'm not going to go through the rest of these. I'm going to finish there. Done.
Is that okay?
Done.
Sorry.
I see you getting fidgety.
No, I'm just conscious that people have a day, and we didn't want to take everyone's day. So, I think I'm going to make one chirpy comment, because I have to. So I'm so happy you didn't use the word blockchain, or disappointed, because apparently that's a cool word to use in your world. But
there are some. We are already interacting with blockchain-based exchanges.
Oh, you did it.
It's been a mixed experience. It really has.
Okay.
Automation isn't necessarily what it's great.
Thank you. So I'm conscious we are I know everyone started a bit late, so I'm going to give anyone the chance to leave now if you have to run away. Please don't feel obligated, but if anyone would like and continue with some questions, I think we're happy to take questions for that. Or please join us for some snacks and some still coffee. So who wants to stay and ask questions, please do. Who wants to have a coffee, please go. And if you have to run away, we're not offended there. But hopefully some food for thought, and I hopefully provided some inputs on three key topics. Thank you very much.